Hello? Can you guys hear me? The market is dropping. Let's see. Can you guys hear me? Can someone type in the little chat, please? Thank you. Like, it doesn't tell me. All right, thank you so much. I appreciate that. Oof, we are coming down. Let's see. So I'm showing you guys this order flow footprint. Yeah, this is a new stream. I am not streaming in Discord. Like right now, I am just looks like President Trump is speaking. That's why we are coming down. Damn. I don't know if you guys are trading or not, but if we go up to 25,285 and reject, that would be a place for a short. If you are not in a short already. I'm gonna do futures basics. Do you guys want me to do futures basics right now, or do you want me to do a little bit of live trading, not trading? live. Do you guys want me to put the order flow footprint? This is what most people don't use this, guys. So, but I do because it looks pretty. No, this here tells me, you know, on the bottom what the negative delta is and positive delta and things like that. I'm waiting to see if we'll go up and reject 285. The issue is that we've already came down quite a bit in the past, what, 5, 10, 15 minutes or so. So this is the point of control. Let's see. You order ticket. That's not what I want. Basic entry. That's not what I want. Okay. So it looks like this is basically just news stuff. Trump just said breaking. Maybe the meeting won't happen with China's President Xi. That was a little while ago. We're leading China in the AI race. Okay. So it's a little volatile right now to be trading because this is basically based off of what he is saying. And as the news is coming in, and I'm not actually listening to the news, I don't have the news squawker right now on. Um, all right. I'll do some live trading when we're not in the middle of a Trump speech. But I took shorts this morning. They were pretty nice. Let's see. Alrighty. Where's my website? All right, guys, I'm gonna do a webinar on futures basics. So basically, just go over everything that you would need to start trading futures if you've never traded them. If you're gonna basically learn in this little 45-minute webinar, you're gonna learn a lot. Also, I will answer any and all of your questions at the end. There are no dumb questions, guys, because we've all been there where we didn't know what, a lot of the things meant. So don't feel like you need to, not ask a question because you might think it's dumb. Other people might have the same question, okay? And like I said, I'll answer that at the end. This is going to take about 40-ish minutes, 45. I'll try to get done with it as fast as I can. So let me go ahead and get started. Oh, actually, I just got to get something before I do that. Gonna need this. A presenter. Okay. All right, let's get started. So, Futures 101. What are futures? So futures trading is basically a contract between a buyer looking to invest and a seller where the contract is made for the future and has an expiration date. So there are two participants. We've got hedgers and speculators. So hedgers protect their assets from risks and speculators are usually floor traders. And as retail traders, we are considered speculators. So the futures contracts are available on 5 different assets: equity index futures, interest rate futures, commodity futures, currency futures, metal futures, and they have expiration dates. Okay, so whatever broker that you're using will prompt you for like a auto rollover notification. So I will actually go over all of types of ways you can trade, whether it's with your own money, with traditional brokers, whether it's through specialized brokers, futures brokers, or with prop firms, just so you guys know. Okay. Because at some point you might want to do all. But basically, equity index futures, typically they expire on the third Friday of every third month. So S&P 500, E-mini futures, and NASDAQ expires quarterly. So March, June, September, and December. So right now we're in October. We are actually trading the December contracts. So a couple of weeks ago we had to roll over hour contracts. But if you're trading in interest rate futures, commodity futures such as like crude oil, gold and silver, metal futures, currency futures, they expire monthly. So monthly you would get a little notification to roll over. So the purpose of this is to teach some of the fundamentals of how futures work, how you can trade them on your own account, and how you can get, a funded futures account, since I believe that many would benefit from adding futures trading to their skill set. I also see a lot on social media, and I feel like there's a lot of people jump into futures without actually getting any sort of education on it. Um, and my purpose of doing this is so that you guys will have the fundamentals and the foundation. Because how are you going to be successful if you don't know what you're doing? And, unless you've got loads of money to blow for trial and error, then, be my guest. But when I started trading futures over 3+ years ago, I used to trade options. And when I, came over, there was barely any, I didn't know anyone trading futures. A lot of it was trial and error. And I wish I had someone that went through, everything with me in a short amount of, like a short amount of time where I didn't have to search and Google and this and that. Just, um, to be ahead. So, um, so I'm gonna teach y'all how to be pros in this. No, I'm just kidding. All right, so the key terminologies used in futures trading. So lot or contract, which is the unit of the instrument. So if I say I'm trading 5 NQs, just means, 5 lots or 5 contracts of that instrument. Tick is the smallest price movement that a futures contract can make. Okay, point is a $1 move or one handle. Globex is basically an electronic trading platform used for derivative futures and commodity contracts. However, traders also use the term Globex to mean overnight session of the market. So, for example, if they're at night when they're trading Asia or London time, they'll say, "Oh, I traded Globex." Okay. Um, regular trading hours for a specific exchange or market center typically is during the New York session exchange open. Contract month is the month in which a futures contract expires, and delivery month in the month in which the underlying asset of a futures contract is delivered. Margin is the amount of money required to be deposited by a trader to open a futures position. Open interest, the total number of outstanding futures contracts in a market. And settlement price is the price at which the futures contract settles at the end of the trading day. Typically, you're going to hear a lot more, lot, tick, point, Globex, that kind of a thing. Most people don't ever really talk about any of this down here, so you don't have to memorize it or anything like that. So first off, the market is essentially futures, and we frequently discuss ES, so the S&P 500 futures are those. Although these futures are traded similarly to other derivatives, leverage is what they offer above all else. So futures trading is simply a very leveraged form of stock trading. So to contrast the futures, an S&P 500 futures contract offers roughly 32 to 1 leverage. And because ES trades in ticks, aka a 0.25 spread, one contract changes value by $12.50 for every 0.25 that it moves. You gain or lose $50 when ES moves 1 point. So if ES changes 10 points, you either win or lose $500. However, 1/10 of an ES contract is MES. So instead of the $50 per point for ES, it is $5 for each point for MES. So many, it's literally the 1/10 of the same stuff. Okay. So many new traders, I would say, jump straight into NQ or ES, which is the minis, thinking they're just trading futures when the risk is equivalent to trading a full index value. So they don't realize that trading NQ is like trading NBX, or trading ES is like trading SPX. Most traders should be trading MNQ when they start out, especially, which is like trading QQQ, or trading MES instead of the ES, because it's more like trading SPY. A lot of people are, if they're trading options, they're trading SPY, QQQ. Not many of them trading SPX, and this is how they blow up their accounts really fast. So one NQ contract moving 50 points is $1,000. One ES contract moving 20 points is $1,000. So 1/10 of the risk is the micros. So, bottom line is don't trade NQ when your account size says you should be trading MNQ or, ES. So if you see here, this is just, it's kind of same thing that I'm talking about, but I wanted to point out to CL, which is oil. Oh, sorry, I forgot to read up here. So, so futures trade more in a manner of akin of to shares and options. So there's no theta, there's no IV, no Greek. So stop losses can be placed at precise price points, and also each futures contract has its own specification, including the size of the contract, the tick size, which is that minimum price movement, and the delivery date. So micro E-minis are 10th as small as E-mini contracts. But here, in ES and NQ, there are 4 ticks in each point. So each, for every 0.25 it moves, is $12.50 or $50 per point. If you're looking at NQ, it changes value $5 per tick or $20 per 1 point, but the micro version is, it's 1/10 smaller. So, 1 CL, which is oil, changes value by $10 per tick or $10 per 0.01 cent. Okay, so each penny is a tick and it's worth $10. Okay, this should actually say $1,000 per point. I need to correct this. It's not $100 per point. So if oil is trading at $60 and it goes from $60 to $61, so that $1 move is actually $1,000. And I found out the hard way because when I first started trading oil, I did not know that it moved $10 per tick. So I get into a position and I'm like, why am I down $80? I just got into the position, like it hasn't moved. Well, it's because each penny was $10 and I was down only by like 8 cents. And I'm like, what the heck is going on? I thought it was a glitch. So that's just to kind of explain that everything, all these instruments change value differently. And the next page here, I'll show you guys where it's like a little cheat sheet to know what changes for each instrument. So futures market is open 23 hours a day. You must close out your position by 4:59 p.m. Eastern if you're trading funded prop accounts. It opens Sunday at 6 p.m. Eastern and closes Friday at 4:59 p.m. Eastern. And typically the best times to trade, I would say, would be during the New York Stock Exchange market open or during the European markets, which is in the middle of the night. You also need to check during the holiday as hours may vary. When we had Labor Day a month ago or so, we were futures was open from that Sunday night at 6 p.m. and it closed that Monday at 1 p.m. However, New York Stock Exchange was closed, so we don't have the exact schedule. Okay, so this here is basically more of a comprehensive futures contract specification. You can see it gives you the description, S&P 500. Minimum tick is 0.25, how much it moves, and then the micro version of it. Same thing for NASDAQ, or if you're trading gold, if you're trading oil. So it's just something to kind of have handy if you need to take a look. It's like a little cheat sheet. Okay, so there are different ways of getting funding. I'm going to start out with funding your own account with your own capital. One way is if you're using like a traditional broker, such as Interactive Brokers or TOS. You know, it, trading micros roughly cost about $2,300 for like an MES lot, and about $23,000 for one ES lot. And again, you want to check with your broker how much capital you would need for these, what the margin amount is. But you know, you're able to swing trade with when you have the initial balance. However, a second way would be if you are using a broker that specializes in futures, such as NinjaTrader or Tradeovate or AMT. Webull is another one. So instead of the $23,000 for the traditional brokers, you know, Tradeovate offers a $500 to $1,000 a day or day trading margin for E-mini contracts. And micro contracts are even more affordable, which so MES costs only like $50 day trading margin. MNQ costs $100, so this is for the day trade margin only. Overnight positions require full initial margin. So like for one NQ, day trading it is $1,000, but if you want to swing trade, let's say over a weekend, then one NQ is $33,000. NinjaTrader owns Tradeovate, so you can fund NinjaTrader and use the money on the Tradeovate platform. You can also, you know, go to their website and practice in the sim accounts, just see how it works. So basically, the distinction is that when you purchase or sell a contract, you're not purchasing ES shares. Therefore, it costs the same amount of money to buy or sell one contract, regardless of the price of which ES is trading. And margin is a term for this. So TOS and IBKR need, like I said, about 23K for each or for a single ES contract. But for a broker that specializes in futures, you know, it's actually fairly affordable, making it a good choice for anyone who feels comfortable trading their own money. So also margins do change based upon news events. So you would need to check your broker and the margin specifications. So this right here is the margin requirements with NinjaTrader and Tradeovate. Okay, so see how on the left side says day margin and then on the right says initial margin. So Tradeovate offers reduced margins for both the day session as well as the overnight session. So reduced intraday margins are available from 6 p.m. Eastern until 4:45 p.m. Eastern the following day. So if you open up a position at 6 p.m. Eastern, you can hold it for almost 23 hours. You would only need to use this day margin, which is fairly affordable. If you're using the micros, it's even more affordable. Okay. If you are wanting to swing trade and you don't want to close out your position by 4:45 p.m. Eastern, then you need the initial margin per contract. Okay. And the initial margin is required from 4:45 p.m. Eastern until 6 p.m. Eastern. So basically, for me as a day trader, as a scalper, I don't swing trade futures, so I don't need to utilize the initial margin. I don't mind closing out a position at 4:45 p.m. and then reopening it back up at 6 p.m. Granted, there are times where we've got, you know, a gap down or a gap up, whatever. But what I'm saying is that if I really want to hold for like 23 hours, which I don't, even when I can, the day margins, I don't hold that long, but you can. So there's no PDT, guys. So you can get in and get out as many times as you want. Obviously, there are commission fees, so you want to watch for that. But I think the account minimum is like $250 to open up a Tradeovate account. So it's one of the lowest in the industry. And then if you stick with micros, you can just day trade the micros. And the third way is trading prop firms. Okay. I know you guys have seen this all over social media, and I'm sure you've, probably wondered what it is and if it's true and how it works, whatever it may be. So basically, you would utilize a finance partner, also known as like Tradeify, Apex Trader Funding, Take Profit Trader, the Futures Desk, Top Step, or My Funded Futures. There's so many others, guys. But Tradeify, for example, has a 1-day pass. Top Step has a 2-day minimum evaluation where you can be funded in as little as 2 days. And Take Profit Trader has 5 days. However, for example, Apex has a 7-day pass, but most of the time they will have like a promotion going on where it's a 1-day pass. So, and here I'll use Apex Trader as an example, but you basically demonstrate to the prop firm that you are a successful trader. You must pay to enter the evaluation, which is a SIM account. Okay. If you succeed, you will then be given a funded account to trade with, and you pay the activation fee. However, note that some firms don't even have activation fees. It just depends on accounts and prop firms. And you get to keep all of the proceeds up to $25,000. You keep 90% of the profit after the first $25,000 you earn, while they keep 10%. You want to see all of the prop firm rules or whatever prop firm you're utilizing. I think that's the biggest thing that I see with traders. They'll just hop on and they don't go look at the rules. But some people will get multiple accounts when it's on discount, so they can trade them at the same time. There is a trade copier you can use, and each account must pass the performance evaluation as they are all standalone accounts. So, is this too good to be true? Not really. Most traders fail due to lack of discipline, and this is how these companies make money. Okay, 95% of traders fail. It doesn't matter if you're trading options, if you're trading equities, if you're trading crypto, if you're trading futures with your money, with your grandma's money, with lotto money. It doesn't matter. Or prop firms, the statistics are that 95% fail. Okay, that comes down to being disciplined and managing risk. Okay, so if you can trade the chart, such as price action, you can stay disciplined or consistent, then you will make money. Okay, there are people that have already withdrawn their funds in multiple prop firms, but they're also consistent. And the worst that can happen is you would lose your account evaluation fee. You do not pay back any capital. And you can also take these evaluations as many times. It isn't just once and that's it. You can also trade your own funded accounts on NinjaTrader with your prop firm accounts. You would just have to sign up for a personal account through them and fund it yourself. Once funded, you would just connect all of them together. And in my opinion, the greatest, if you just want to test it out, would either be to go through the prop firms, although they have, they have regulations or tight regulations. You're essentially forced to have good habits by those rules, or just go to like tradeaway.com, ninjatrader.com, and play with the demo account on there to test it out. But I would not suggest anyone using their own funds, especially in the beginning, because futures are not the same as options, especially if you don't know how to manage risk. It's imperative that you understand how to trade futures before you're start putting your own funds on the line. Okay, so why prop firm versus trading your own money? So this is from Take Profit Trader. All technology and account setup is done by them, so there's no documentation or any like painful account setup experiences. Simply put, most traders are undercapitalized, and you level the playing field by using their accounts and not your own funds. So, trading your own funds can lead to severe losses. However, if you're using a prop firm, your losses are limited to your associated challenge fee. Also, lack of discipline, haunts traders, and the risk management system and rules will make sure that you stay disciplined during the trades. Let's see. All right, I'm going to actually pull this down. So, This here is from Apex, similar with all the other firms. I'll show you guys, but um, basically, let's say you get a 50K account, okay? Um, your profit goal is $3,000. Once you meet your profit goal, you pass the account, and as long as you don't go below the trailing threshold, which is $2,500, okay? Um, if you are trading with Top Step, for example, same thing. You have a 50K account, $3,000. However, you get less of a cushion, which here it's 2,000 and Apex is 2,500. Same thing with Take Profit Trader. Take Profit Trader is one firm that you can withdraw funds daily. And same thing with the futures desk. You can withdraw funds daily, and they have one of the best static accounts I've seen. Let's see. And then there is a thing called straight funding or lightning to funding accounts. So what it means, so this is from Tradeify. There's no evaluation at all. You can skip the evaluation and you are funded. Obviously, that this is not the price because there's I think a 30% off right now. But you don't have to take the evaluation. I personally wouldn't suggest someone just jumping in and getting a straight funded account. It's probably best to try to pass it on your own. There's two different ways. I mean, they also have advanced and growth, so you can try that as well. But that's an option. It's more for those that already have passed and they just want to, keep adding to their arsenal, to their whatever you want to call it. But here, what I want to talk about is the different types of drawdowns. And this is what a lot of people miss and how they end up, blowing their accounts because they don't take the time to understand what this is and the type of accounts that they're getting. So we'll start with the intraday trailing. So how it works, your drawdown limit moves up with your balance and unrealized gains throughout the day, but resets to the daily starting balance each day. What does that mean? So let's just say, for example, you are using a 50K account with 6%, or you have a 3K drawdown. Your day starts at 50,000. Your drawdown is 47,000, which means you cannot lose more than that $3,000. Otherwise, you're going to breach your account. So at 10 a.m., you make $500 profit. You're up to 50,500. Drawdown moves to 47,500. 11 a.m., you make another $300 profit. Now your balance is 50,800. Your drawdown moves to 47,800. 1 p.m., you open a position with $600 unrealized gain. So now you're at 51,400 unrealized. Your drawdown moves to 48,400, which is $3,000 under this, even if it's unrealized. Okay, it trails unrealized gains. It does not. You do not have to realize these gains. Okay, so 2 p.m. you close your position for $400 realized profit, and now instead of being this up at 51,400, you're at 51,200. Your drawdown is still going to stay at 48,400. It doesn't go down. So let's say at 3 p.m. you lose $400, and now you're down to 50,800. Your drawdown still stays at 48,400. It doesn't go down. So now your remaining drawdown is $2,400. And the next day, it resets to 50,800. That's your balance. Your drawdown is the 48,400, which is $3,000 from the highest balance, including unrealized. You've got $2,400 left before you blow the account. Okay. If the intraday trailing is geared more towards base hits, and if you're not, oversizing, more for scalpers, that kind of a thing, if you are the type of a person that likes to hold a trade all day, then this is probably not going to be the best for you. I would say the end of day trailing would be better and the static drawdown would be better. And how this one works is, your drawdown limit only moves up based on your ending balance at the close of each trading day. So 50K account with 6%, 3K drawdown. Day one starts, 50,000. Your drawdown is 47,000. Your total drawdown available is 3,000, because you just started. So let's say during the day, you're up to 51,500, then down to 50,800. Your drawdown still stays at 47,000 all day. It does not move. Okay. Total drawdown available is still $3,000. It stays fixed all day. So day one, you close at 50,800. Your drawdown will update to 47,800. So it updates at the end of the day. Okay. So the next day when you start, it's 50,800. Your drawdown is 47,800, which is 3,000 from new starting balance. Okay. Your total drawdown is available, which is $3,000. If you, like I said, if you like to hold your trades longer, or, kind of like a all day thing, then the end of day trailing or static drawdown would be better fit. The thing with the intraday trailing is more like, let's say you went up in profits $1,000 unrealized and you let it go back all the way, down instead of securing profits. So that's kind of, a little bit of a difference there. The stat also do note, though, I do want to note this, that intraday trailing, once you've passed your funded account and you are over your threshold. So for example, here, let's say your profit is, your drawdown is 3,000. It's usually $100 over your drawdown. So as soon as you would be over $53,100, the intraday trailing would stop and it would not trail up anymore. So once you're funded, if you go up to 60 grand and come back, even, as long as you're above that 53,100, you're fine. You're not going to lose your account. So it becomes static. Static drawdown is your drawdown limit is fixed based on your starting account balance and it never changes. So let's say 50K account with 3K drawdown. Your drawdown is 47,000. Start at 50,000. Let's say week one you grow to 55,000. Your drawdown still stays at 47,000. Month one you grow to 60,000. Your drawdown stays at 47,000. Okay, say month six your account is at 75,000. Your drawdown is still 47,000. So reality check, you can lose $28,000, which is, the 75K minus 47K, and still reach the account. So, but the static account, which like the futures desk has one of the best ones, it just stays, the drawdown limit is fixed. So when you hear of different rules, that's kind of, different firms have different rules, different accounts. Some have end of day trailing and static accounts. Some have intraday trailing, end of day trailing. So you just have to, some just have intraday, some just have end of day. So you just kind of have to see what, what they offer, right? So here, basically, it's just to give you guys a little bit of an example between a few different prop firms. So evaluation rules, okay? So like I said, Tradeify has that lightning day or lightning, which is basically a straight to sim funded. You can skip the evaluation. It's a one step. And then they also have where you can pass the account in 1 day. So you can be funded if you meet the profit goal, you can be funded in, the same day. Typically, the evaluation or test accounts are less expensive. And, with Apex is the only firm that allows you to have 20 accounts at the same time, or 20 funded accounts. A lot of people stock up on them when they have sales. So they can copy and trade 20 accounts. However, if you're brand new into this, I do not suggest anybody copying and trading. Pass one account, see how it goes, and before you continue to stack. Take a Profit Trader has daily withdrawals. Once you pass it, then you can start, as long as you're over your low threshold, you can start withdrawing money. And then the futures desk, pretty much the same thing as far as the daily withdrawals. There's no consistency rules or anything like that. So some of these firms have consistency, and I'll explain that to you guys in a second, during evaluation, but not during once you're funded. So for example, Take Profit Trader has a 50% consistency during the test. Once you pass, there's no consistency rules. Okay. Same thing with the futures desk. It's not a, it's called a base hit, or, similar to a consistency rule. But once you pass, there's no consistency rule. So let me actually kind of click here. Okay, so let's just add some firms for comparison. So let's say, you could Tradeify, 50K account, automatic coupon code, and you want to include the activation fee, because once you pass, there's going to be an activation fee. Top Step, same thing. You can also see here where it says end of day trailing, and then the profit target and drawdown amount. So you can actually compare, same thing, same firm, or firms that have the same profit targets or similar, and drawdown amounts. So Top Step, for example, has a $49 discount, but once you include the activation fee, it actually ends up being $198. Whereas, Tradeify doesn't have an activation fee, but it ends up being $97 total. Okay. The consistency rule, basically what that means is that you would calculate how much your best trading day represents as a percentage of your total profit. So let's say, you need to make $3,000 to pass an account. And so Top Step here, they have a consistency rule where you cannot make 50% or more of a profit in one day. So let's say you make $1,600. Okay, so today you made $1,600. Well, you're over that 50%. So you're now at 53.33%. You need to continue to trade to bring this, either your overall profit needs to go up to bring this under 50. Let's say you made $2,000, you're at 66%. However, if you make $1,500 or less, then you're going to be at that. It's honestly not really, it's not hard. There's the consistency. Technically, as a trader, if you're in it for the long haul and you're trading, daily, you're going to have profits where, you're at $2,000 a day. Other days you might be, $500, whatever it is. But overall, like over a 2-week period or a week period or whatever it is, this number is going to drop. So you're going to end up being, really good traders have like 7 to 10% consistency, even with the big wins. And you're not going to have a 20K day every single day. And if you are, you're probably full porting and, maybe getting a little lucky there. But, and even if you do, if you can pull off 20K every day on the same account, then you're going to be under that 50%. So let me go back. Where did we go? Trading resources, futures basics. Oh, actually, hang on, let me go back to here. So these featured firms, these are the most that I use, to be quite honest. You can compare. There's like 20 some firms here. You can do go to, like, for example, you want to just do end of day. You can compare by end of day. Oops. You know, and if it's an evaluation, if it's straight sim funded, you can kind of scroll back. Let's say, I don't know, you want to click on full details, and it'll give you more of a condensed version of all of the prop firm's website. So, and you can also click on it, and then it'll take you to the website. And so that's kind of a, you can also do a cost calculator here. So just type it in without, you know, doing the comparison. So it will kind of help you with, I think that the comparison ones, if you find like 3 or 4 firms you're wanting to look at, comparing them would be probably the best. But okay, let's go. Next. All right, so this right here is Project X platform. Top Step only offers this. So if you guys saw probably all over social media, with the AWS being down yesterday, it did have an impact on the Project X platforms, which many firms use Project X platforms, but you know, like Top Step, they'll have Top Step X. The futures desk is going to have like TFDX. So it looks kind of like a trading view. You know, you've got your buy and your sell. If you're going long, if you think the market's going to go up, obviously you would buy, you know, join bid, buy market. Or if you think, you know, we're going to go down, then you would sell market, sell ask, or join ask. And then, you know, input how many contracts, this and that. Obviously here you would change, instead of NQ to have MNQ, especially if you're brand new, guys. And no matter what, have a stop loss. Have a hard stop loss, because you can always re-enter a position, even if you get wicked out, because you're going to see how many times, you know, and actually I'm going to show you guys how fast you can get wiped out if you do not have a stop loss. So, okay, this right here is NinjaTrader platform. I use NinjaTrader. I use TradeAway and NinjaTrader. So NinjaTrader allows me to add on, you know, indicators like this, where I can have a customized order flow footprint. Just kind of gives you more of an edge when I'm trading with where my levels are, you know, what's happening within a candle. I would say 99% of traders do not use this, but you guys are probably going to see more and more traders using order flow footprint. And this right here is a TradeAway prop firm or prop platform. You can customize it, you know, add charts, remove charts, whatever. But same thing: buy market, buy bid, sell market, sell ask. You know, if you know how to chart SPY and how to chart QQQ, if you're using Fibonacci's, if you're using moving averages, support and resistance, whatever you're using currently is going to work for futures as well. So a lot of people will actually chart SPY or QQQ and execute the trades on NQ or MNQ or, you know, ES, MES type of a thing. So so some of the key points I wanted to, you know, point out. You basically, like I said, you just need to know how to chart, just like you would SPY and QQQ. While this is considered easier than options, it is in respect due to no Greeks. So there's no theta decay. You know, your premium isn't going down even if you're in the right direction. However, most struggle with risk management and FOMO and mindset. And that's where a lot of, you know, people get, you know, I say, I guess, blow their accounts. So when you're trading futures, one thing or a few things, the first thing you should always check is the calendars. Okay, we rely on this very, very much. So when they say there's no news trading, it's talking about CPI, FOMC. Some prop firms will allow news trading, some will not allow, like a 1 minute before or 1 minute after. So you just have to kind of look at that. Okay. So you can red folders, especially, like that's in the Forex Factory. Um, Obviously, right now with the government shutdown, we don't really have a whole lot going on. Let's see. I do, yeah. So on the 24th, though, they are going to release CPI and PMI. That is going to be one heck of a day. So a lot of firms, like I said, will not let you trade, but others will. So, and some will let you trade these red folders in evaluation. Others won't, but they'll let you trade it in the funded stage. And other, like, you just have to read their rules. Another thing is, the earnings season is upon us. Go to Earnings Hub and see what's coming out today. And just like we've got Netflix after hours, because futures is open past when options and everything closes. We can actually play with when we've got like Microsoft or Google or Netflix that comes out in the aftermarket, after hours. So just kind of check on that. And then one thing I always look is every morning, I go through bar chart to see what's happening, or Benzinga. Financial Juice, this is like a real-time financial news aggregator, just kind of market updates. So it's kind of essential to be prepared. Don't trade blindly. Also down here, there's more like, strategy and setups and risk management, technical analysis, psychology and discipline. But I wanted to point out something to you guys. So this website, it's called propfirmtrend.com. This is completely free. There's like no hidden fees or anything like that. But it's got, for example, trading psychology. Okay. A lot of us, we hear this all the time, is they'll say, oh, don't be emotional. When you're trading, don't let your emotions get you. Well, guess what? We are all human, and therefore we have emotions. So this is an honest self-assessment when you're, before you take a trade. Go through it. If you are, anxious, greedy, whatever it is, it's going to tell you consider not trading today. Or if you're whatever confident and calm, but you might be a little bit fearful, whatever it is, right? It's going to say to proceed with caution, size down, that kind of a thing. You can also do a cognitive bias check. Sometimes we have that herd mentality, following the crowd without analysis. And, just journal that, because at some point, you can come back to this and see, okay, well, these are the most emotions or that come up while I'm trading. So when you start to get that emotion, if you go on a tilt when you are, I don't know, vengeful, then stop trading so that you don't get to that point. I know every single time, and this is even before the market opens in the morning, if I have like I feel like I have a knot in my stomach, I'm anxious. I don't know what it is or why. Every single time I will have a big loss that day. And I've learned to, when I have that, I'm either going to size down a lot, or I'm not going to trade, because um, I've never had a day where I didn't have a big loss. If I was, so you have to kind of self-assess and see what, works. So here's the risk management calculator, and this is why many, I will say, fail. They blow their accounts because they don't know how to manage risk. They don't know how to. They'll get these prop firm accounts or they'll trade. And same thing with options. If you are going in full porting or you're going in with half of your account on 0 DTE, well, guess what? Sooner or later, you're going to blow that account. And so let's say, I don't know, MNQ, okay? Let's just say your drawdown amount is 3,000. Actually, you know what? A lot of people get the 50K account, so we'll just say it's $2,000. Typically, a risk per position, not per daily limit, but per position, you shouldn't risk more than 2%. So let's say today we're trading, I don't know, 25,000 on NQ, and we are going to have a 10-point stop loss. Well, when you calculate your position, you should really take 2 MNQs, okay? Okay, sure, you can go up to 5% if it's more aggressive, if you have a high conviction setups with strong edge, bump you up to like 5 contracts. And that's fine. You're risking $100 per position. But this is what I see all the time. In fact, it's even worse than the 15%. I will talk to people who are like, hey, I blew my account. And I'm like, okay, what size of an account? Oh, it's a 50K. All right. I mean, it's not even going to calculate a position, I don't think. Oh, it might. Okay. How much did you size? What the heck? They'll go in with 4 NQ contracts. Notice that 15% says you shouldn't even trade 1 contract. And it says your, account destruction zone. 15% risk is gambling. It's not trading. 5 losing trades, you're going to be down 50%. 7 losing trades, your account is likely destroyed. And this is how 90% of traders blow up. So a lot of times people will keep going through evals because they are sizing in 50, 60, 70% per every time they take a trade, and then they get upset that there are rules. Well, here's the thing. If I gave you $2,000 and you put that into Robinhood to play with options, and you went in on 0 DTE full with that $2,000 and you lost it, is that a Robinhood rule, or is that like, you didn't have any more money to play with? Like that's what people don't understand, is that you are responsible for your own actions and for your own risk management. If you are sizing in 2 to 5%, it will take very long for you to blow an account. But if you are telling me you blew your account in 2 trades, that already tells me you over leveraged. Sure, you're going to get lucky a few times. You're going to make a couple of grand doing that, but more, likely than not, you will not be growing an account. So another thing here that is available is a free trading journal. Like literally, you can import everything, all of your trades. There's a growth calculator, so you can, just kind of play out, okay, if I start out with $2,000 or whatever it is, and I risk, your risk to reward ratio, let's just say, is 2 to 1, okay? It means that you risk $500 to make $1,000. With this ratio, you only need 33% win rate to break even, okay? Anything above that is profit. So that's why your profit targets must exceed risk. What I see is people risking $1,000 to make $200. That's not going to work because, sure, like I said, a few times you're going to, whatever, you'll get lucky. But to grow an account over a period of time, your risk needs to be smaller than your reward. And so, for example, for me, I'm more of a scalper. So I have a 10 point or 40 tick stop loss. My aim is to get at least, for my profit, is at least 10 points or more. And typically I'll get more than, but at least my stop loss is pretty tight. And, if I had a 20-point stop loss, well, that means that, in my next trade, I need to be making more than 20 points just to break even. So, you have to kind of play around and see what works with you. What, like the stop loss, everybody's different. Most people think 10 points is very tight, but that's just kind of. And then another thing here is you get a free, like, premium journal, kind of like TradeZella, and it has like trading plans in here and everything. So let me see. I feel like I'm missing something. Psychology lab, no. Trading resources. No, I don't think I am. I feel like I've probably gone through everything. But yeah, the biggest thing is for you guys to, prop firms are not looking for gamblers or lucky traders or any like windfall traders, and they're not looking to, for those to work the system. So if you are in trading for the long term, this is not a get rich quick. It's just not. If you're in it for the long term, take the slow lane, learn what you need to do, take the risk calculator, calculate your position, all of that. That's what you need to succeed. Journal your stuff so you can go back through and see, okay, this is what I'm doing good in, and this is what I'm not doing good in, and this is what I need to fix. All of that, just to kind of, help you guys out. So let's see. Do I have any questions? Did I kind of talk too much? I did, didn't I, guys? I'm sorry, but I really want you guys to be prepared before you start on this journey. You're going to see a lot of people hating on rules, well, because they were never prepared for it in the first place. And that's the sad truth. They don't take the time to, review, to go over things. They try to wing it. Well, it's not going to work. And if you, like I said, unless you've got a shit ton of money to blow accounts, then yeah, go ahead and do a lot of trial and error. But before then, just stick to, learning first, and then, doing a little bit of sim account. And here I'm actually going to show you guys how to execute some of these trades and stuff. So I have a sim account up in here that I opened. So this right here is NQ, okay? Now, let's say I want to go long, just to give you guys an example. So notice how here, where it says 25, 316, it's moving in 0.25. So every 0.25 that it's moving, it's $5, okay? So it moves 1 point, that's $20. So let's say, I don't know, let's just do buy bid, okay? So I'm down 1.5 point or whatever it is. It's already $40, okay? So notice how fast, obviously, if you're in the right direction, that's how fast your profits will be, but we don't look at that. We need to look to see what our losses are, because at the end of the day, we need to preserve our capital. So notice how I have a stop loss. I can move my stop loss. I can drag it, move it, trail it, behind, whatever it is, right? The thing is, when we have news that comes through, and we drop 60 points in milliseconds, by the time you close out your position, you're going to be down. You might even blow your account, especially if you're getting the smaller accounts, the 50K or whatever it is, right? So, okay, this is I'm down 4 points, 5 points, whatever, right? Oh, I'm on the wrong time frame. All right. Oops. Now, this is NinjaTrader. You do not have to execute on NinjaTrader. I'm sorry, you have to execute on NinjaTrader. You do not have to chart on NinjaTrader. You can chart on TradingView. You can chart on whatever you want. Okay. So, gonna close this out, but this is just to kind of show you guys just how it moves, right? There's nothing to it really. If I do MNQ, which is the micro version, which is here where it says micros. Whoops. Same thing. It moves in 0.25. I don't know. Okay, let's go in. Oh, no, I didn't want to do 3. I want to do 1 so you guys can see just how it moves with the dollars, So it moves $2 per point. Notice this is like, when I trade these, I always look at points more so than the dollar amount, just because it's better for you to get consistent with trading. So watch how fast, oops, I'm about to be stopped out. It's a very tight stop loss. Most people would have a stop loss like down here. And that's okay. You can, if you're sized down, you can do that. I just prefer to have it a different way. But I'm only down $11, even though I'm down almost 7 points. But it would be a different story if I was down 7 points with one NQ. Okay. And then ES or MES. ES. Let's see here. I used to trade ES. It's less volatile than NQ. I happen to like the volatility of NQ. So here, each point changes value by $50, or every 0.25 changes value by $12.50. So I don't know. Let's just say we go short. Again, guys, I'm just trying to show you guys the how it works. Because up here you can click and change if you want it in dollar amount, if you want it in points or in ticks. So okay, so there's 1 point, $50. Okay, I'm gonna close that and let's go to MES, which is a micro version of ES. But that's not what I wanted. MES. Okay, it's the same thing, but it's 1/10. So it's like SPY. Let's say, I don't know. Oh, shoot, no. I don't want 3, I want 1, just so you guys can see. Okay, see how it's $1.25? So each quarter is $1.25, and each point is $5. So that's the difference. All right. Hi, Ava. Okay. So, do you guys have any questions on any of this? No questions, guys? Nothing? Damn. Alrighty. Usually there's like a little itty bitty delay, but like I said, guys, don't feel any type of way about asking a question. No question is a dumb question. Let's see. NQ. What's NQ doing? All right. Well, bye, guys.